everyone. How are you guys doing?
Good. We're doing good. How are you doing?
Great. I'm good as well, thank you. So I suppose we are still waiting for more people, right?
Gustav, right?
Yeah.
And Arjun?
Cool. Anyways, thanks Natalie for organizing this event. It's really great to be here again this year. And today, this panel will be about DeFi Market 2021. With us here, there will be the top leaders within the industry of DeFi. So maybe while we wait, you guys can already introduce yourselves to our audience.
Eitan, do you want to go first?
Yeah, sure, no problem. Hi everyone, my name is Eitan Kachka. I'm leading the community and the ecosystem development in B Protocol. Before that, I've been in a few different crypto startups since 2014, starting with Zuz, one of the first non-financial probably dApps, still building on Bitcoin blockchain before Ethereum was even live. It was fascinating few years to see how this whole ecosystem is growing so fast, and definitely in the last year, coming back into DeFi and working on B protocol is just, everything is booming. So it's exciting times.
Yeah. And my name is Dennis, and I'm the head of ecosystem growth at Kyber Network. I've been involved in the space since early 2016. And back then it was like a completely different world compared to what it is today. And over times, I've met so many different teams from different projects, including on this panel as well. It's been like an amazing ride. And I've been super blessed to be able to kind of live this experience from Kyber's side. And that's a bit of my background.
Sounds great. Gustav, welcome. So please feel free to introduce yourself.
Yeah, thanks for having me. My name is Gustav, and I cover the European and African business development for the Mega Foundation right now. I've been with the team for over 2.5 years, and good to see you again, Dennis. It's been a while.
Yeah,
good to see some familiar faces. And yeah, like I got into the DeFi space because I was living in Argentina, and back then, I was looking for solutions to escape the inflation, and that ended up landing me a job at the Mega Foundation. And it's been a couple of very, very crazy years, but it's really good to see kind of like the growth and progress that we've seen in the DeFi space in the last 6 to 12 months.
Sounds great, guys. Thanks all for the introductions. So to start, I guess Gustav actually already answered the question, but I'm just curious to learn more, like how did you get into DeFi? Did you start investing first or just like exploring? So maybe Dennis, you can start by telling us your first experience that you had.
Yeah, I mean, like I first, let's say, used Ethereum back in 2016, and it was a very simple experience. And to go through it, it was just transacting. There wasn't much DeFi at the time, but we always had Maker like in the background. It was the one like DeFi project from day one that's always been there. With the start of Psy and the early day community calls. And I think the first experience must have been maybe Maker when it first launched, or maybe everyone went through the Ether Delta days as well, which was like a very simple order book that was around in 2017. It was kind of primitive. It was clunky. Everyone was front running each other. But those were my two first kind of experiences in Ethereum within the financial, kind of sphere.
Yeah, that's quite interesting. As actually, the DeFi space has been here for quite some time, but only last year it started booming. So when did you realize that? Like, was it on your first experience or only later you realized that it was going to be something big?
I mean, I could tell like early on, like there was a promise, and then since 2018, I was writing ecosystem blogs, monthly updates of what's happening in the Ethereum space since then. And every month it was like doubling and tripling, and every metric was kind of growing, and it hasn't stopped since then. So you could tell this train kind of wasn't going to stop anytime soon. And now we've kind of reached this peak. but then in 5 years' time, we'll look back and it'll look very small right now, even though it looks huge to us.
Great. Ethan, how was your very first experience with DeFi?
Well, DeFi is kind of a it's kind of a new thing, when you look in a perspective. And I think the earliest experience when I before, I'm not talking about Bitcoin and Ethereum, just on real DeFi. I think Kyber Swap actually was one of my first experiences with the real DeFi product. I think it was late 2017 or early 2018. Yaron Vellner was the CTO of Kyber, and currently is the founder and CEO of B Protocol. Send me a link. Just try this new thing we're working on. And it was so simple, suddenly, just to swap, your ETH into a new token, another token. So I remember the UI was very, very simple, kind of an Uber one-click thing, one button click.
Yeah.
Just swap and that's it. And I think I've experienced something similar using Uniswap a few months ago when I came back into this space after a few years of the crypto grid. And it was also this simple experience. I think that's one of the main things, and lacking. I think one of the most things that we were still missing in DeFi for non-technical users. So I think this is one of the things I'm most impressed about, and also with B Protocol, we're trying to push in that direction. To give some kind of a simple UI experience as much as possible. Yeah.
Great. Thanks for your comments. Gustav, you mentioned that you experienced DeFi in Argentina. So could you tell in more detail how was the DeFi ecosystem back then? How did it develop until now?
Yeah, so back then, I think it was mostly Maker, and also there was some simple dexes as well. And I remember the first time I used Maker. I think back then we had 7 or 8 steps before you could actually open what was called a CDP. It was the most tedious process. You had to approve your ETH, wrap your ETH, take the wrapped ETH, deposit it into the CDP, and so on and so on. So back then it was a more clunky experience, but it was also very eye-opening that you could see that you could generate DAI, this stablecoin that you could then take. For example, on Oasis, which was a DEX that also was developed by the Maker team early on, or Kyber or something, and you could directly swap it into other assets, which back then DAI felt not quite as it feels today. Today it's just kind of a given that it lives everywhere and exists everywhere. But back then, my first experiences with it was that this was an asset that you created yourself, and you could then use it for transacting with other assets that you already had inside your head, a very strong perceived value of. So I think that was kind of the first time when I kind of experienced it. But back then, as I said, the experience wasn't quite as nice as it is today. It's definitely come very, very far.
Yeah, definitely agree with that. So I see Arjun has joined us. So maybe you can just quickly introduce yourself. Well, it seems that
he left.
Okay. Anyways, guys. So yeah, it's great to learn how was your first experience. And in terms of DeFi investment, I'm not sure how experienced are you, but obviously there is great rewards that can be obtained by investing in certain coins, and as well there is some risk. So how would you guys manage the balance between risk and reward while investing in DeFi?
We have Arjun back as well. Hi.
Yeah. Hi, Arjun.
Hey guys.
Hey.
my internet connection spazzed out at the last minute.
No worries.
Definitely. I think when it comes to, I think we've seen interesting things happen, right? So we've seen, I think you would have read recently, there was a rug pull on Meerkat on BSE as well. And I think when you're making these kind of decisions when it comes to investing, I think the number one thing which I look at is which is the team which is building this? Is it a legitimate team? And the second thing, what I also try to see is that how do the unit economics of this project work out, right? So at one good a place where you can, so almost every project these days has some white paper out, and if it doesn't have a white paper out, then I'm not sure if I would trust that. But I go through the white paper. I'd read about what are the token economics, what are they planning to do, what are the different tokens they're offering, how does it, and I think that's when you can make the best decision. And I know this process can be a bit tenuous. I mean, ideally you just want to go click, get started. But I think if you do the right due diligence, you look at the project economics, you look at the team, it'll give you a very fair idea of where you should possibly invest. And I really feel like that is the best way of going about it. I think one of the ways where people get motivated is that they look at all the hype out there, they look at the tweet storm, and then they'll be like, oh, let's go there. But that sometimes can lead you to bad places. So yeah, so like in centralized investing, like maybe in stocks or anything, you got to do your research. It's the same. And I think that's something which has worked well for me, and I'm sure that that's something which would work well for others as well.
Yeah, I would just add audits to that list as well. Like many teams are going out
Very
and just going like live on production without any audits. Like for me, that's way too risky. And I mean, in general, the way I think of it is like there's two parameters. The longer the platform has been on mainnet, the safer it is, and then the higher the kind of value locked up, the safer it is. And it's a combination of this. Like Maker has been around for so long and has so much value locked up in it, and the fact that it hasn't been kind of hacked and it hasn't lost money, like talks a lot. Whereas if change even one of those parameters, and the equation kind of changes. So that's how I see kind of risk reward within DeFi.
Great answers, guys. Would you like to add something, Gustav, about risk and reward?
I think one thing that we've also seen is that like a lot of these newer projects, right? They often launch with kind of like a multi-sig or like some kind of like backdoor or back entrance in the code. And I think as Adrian he said that it's a legitimate team. We see a lot of these forked protocols. Like I think forking as like a general thing can be positive, but it can also be quite negative, right? You have the ability to attract a lot of capital very quickly in very, very illiquid markets around the native token and make APYs seem very, very beneficial. But if it's an anonymous team behind it, we've unfortunately seen like rug pulls. So like for me personally, I have like a small portion that I play around with, and then sometimes I do like very experimental stuff. Because I think a lot of us in the space, we think that these things can also be very fun. But it stops being fun if you do it with a lot of your money and you get rug pulled or something like that. Then it's not that fun anymore.
Definitely. There are so many projects just popping up like mushrooms. I mean, everywhere, every day, all the time. So I guess everybody's just going.
I think in a way, it's I'm kind of I'm a proud boomer. I assume I can say on myself. I'm not aping into too many projects, and I think projects that are of course the anonymity is kind of on the regulatory aspect is something that many projects today kind of choose to go in that line. But of course the risks are coming with that. Once you don't know who is exactly behind the project is something I think very important to check before you put your money in there. And I think once there's a very, very distinct parameter, maybe if you're risking too much, is how you sleep going on. If you're not sleeping too well, wondering what's going on with your funds, that's probably where you cross the line for yourself. So I think that's something for myself, being in the 2017 ICO boom and, all those projects that somehow vanished, most of them vanished together with, lots of people funds. I think that's something, of course, today the market is very different. I think projects are much more mature. You see actual real products being used, with billions of dollars in them, something that wasn't there in 2017, which was just, a white paper and a nice website. So today you have, all the previous comments are completely true. You can dive in, you can learn about the project, you can see, who's behind it, you can see what they're actually doing. I think it was a few days ago, someone tweeted on B protocol page, we have this risk page where you can actually read all the risks involved in, getting in to use B protocol, as we're building it on top of other protocols like Maker and Compound. So we actually made it very clear to users. They can actually click in, read the white papers. They can learn the risks that are involved in getting into B protocol and the other projects that were built on. So yeah, that's, I think, something that going to be kind of regular for most projects in the near future, I hope.
Yeah, I also agree. But I guess it also depends how you play in DeFi, because I mean there are so many ways that you can use it. So I mean you can even just farm like USDT and get some tokens. So the risk is pretty low. And of course there are those guys that just want to jump in new coins that can potentially do 10x or 20x. So yeah, I mean I think it's quite dangerous, but if you play it well, it's better than just having your assets sitting on your wallet.
And definitely that correlation to sleep is like a magic metric right there. Where if you're, depending on how well you're sleeping, you know where your assets are, and I know, and definitely, and I think the audits again. What I've also seen is that have the audits been done by a reputable company as well. Anybody can go and audit anything, to be honest, and then it's so important to look into that as well. So some nuances right there, which you sometimes you need to lose a little money before you learn some of these things. But yeah, I mean, the more careful you are, the easier it gets.
Definitely. So guys, in terms of your own projects within your company, what kind of like major contributions to the DeFi space have you done so far? So Ethan, if you want, you can start.
I can, though. Probably we are the youngest project on this panel. So B protocol is a backstop liquidity protocol. Basically, we handle liquidations on DeFi lending platforms. We have launched on top of MakerDAO, and recently, earlier this week, basically on top of Compound as well. And users can just opt in through B protocol to make basically more with the funds and keep on doing the exact same thing that they're doing, with Maker or with Compound, and gain also their share of the liquidation profits that are made by the backstop liquidators. In a way, by this we also, it's kind of a win-only situation where users gain more, but also the platforms get a better stability. So they get a committed liquidators that can make sure kind of more secure during one events like Black Thursday last year. And also the liquidators, this is something that brings them a better predictability. So we actually bring new big traders who can actually become committed into liquidations, which is something most DeFi users are not aware of. This is one of the probably the most unvalued parameters of DeFi. It's one of the main pillars for most of the platforms to actually stand on. I think there are a lot of projects popping up currently. It's we're in a bull market. Everyone is doing whatever they can to get a slice of that. But I think just like in 2017, it's like only a few are gonna probably stay longer once the bull market will come down. And I do believe that a backstop solution is something that is needed actually for DeFi to scale. So yeah, we're just in the beginning, but I believe this is something that is it's important, for DeFi, for the whole ecosystem to actually scale into something which is close to what CeFi, centralized finance currently has to offer. Yeah, maybe I'll...
Sounds great. So Dennis, what about Kyber Network?
Well, I think we were one of the first kind of liquidity protocols to recognize that there's so many great things being built and there's so much liquidity in different products, but they were all somehow siloed. Like the liquidity was just being used within that specific protocol, for example. And we built smart contracts that would allow all these different existing liquidity protocols to come connect to the smart contract, and from there push it downstream to anyone that needed liquidity, like wallets, like games, like let's say you want to sell conference ticket. Instead of accepting just one currency, by connecting Kyber, you could just go and accept DAI or any ERC20 token, and it would go and get it from the best price liquidity out there. So we kind of connected all these different liquidity protocols together. Like we connected Bancor and Uniswap, and then pushed it downstream to over 100 different dApps.
Awesome. Gustav, tell us about Maker Foundation disrupting DeFi.
So the Maker Foundation is the foundation behind the MakerDAO protocol, and I think we are one of the earliest like financial protocols on Ethereum. And to this day, we are one of the most important liquidity providers to a lot of other protocols. We are one of the biggest stablecoin liquidities in the ecosystem, and we see a lot of people there, using our platform on, to access leverage and to also to be able to collateralize their crypto assets currently, and be able to put it into things just like Aave or Compound or something, and do like rate arbitrage. So we see a lot of the DAI that's being deposited into Aave and Compound and so on being drawn directly from Maker. So in that sense, we kind of like help supply liquidity to the other lending protocols. We also the first DeFi protocol who is really targeting, at least of the major ones, that is at least targeting real world assets. So, since multi-collateral DAI launched late 2019, which was the kind of like the version of the protocol we see today, the first version was launched back in December 2017. We are targeting, real world assets, or the protocol the community is, and the community has been spending, the last 12 months on figuring out how can we onboard traditional companies who can then benefit from the liquidity that we have coming out of Maker, right? So it actually seems like very soon that the community will have onboarded the first real world assets company. I think it will be in a week or two, maybe 2-3 weeks. And then we will have basically traditional companies getting financed directly from DeFi. And I think this is also like a really big step in the right direction, right? We have been a little bit limited by the assets that currently exists within the Ethereum ecosystems. And it was kind of like, well, either the assets need to grow in value, or we need to have more different assets, which, again, would just kind of like split out the value from the other assets. So now we kind of like can target a completely new segment and get like a completely new influx of users and liquidity and collateral into DeFi.
Sounds great. Thanks for sharing your views, Gustav. Aryum, what about Matic?
Sure, no, definitely. So our focus is to essentially solve for scalability of the Ethereum ecosystem and essentially create the kind of infrastructure which would allow, or rather put DeFi into the hands of the common individual. So what we've done for that is that we built a scaling solution where for $10, you can do like 2 million transactions. So the gas costs are extremely low. At the same time, our block times are 2 seconds. So all the transactions are extremely fast. So now it becomes possible to build those kind of interfaces, which your typical Web2 investor would be used to. For example, all the different investing apps they might use, like Netflix or Uber, or any app which they're used to in their daily lives. Like you can give them the same Web2 kind of experience, but in a Web3 environment. And of course, what that has allowed us to do is allowed us to basically build DEXs, which where you can swap with next to nothing cost. They allowed us to build staking contracts where again, people can stake, unstake 100 times in a day and not have to worry about how much it would cost them. And what that has resulted in is that over the last, I would just say 3 or 4 months, we've managed to cross 600 million in TVL, and one of the top DEXs on our platform, which is QuickSwap, is doing almost close to 67,000 transactions on a daily basis and has over $100 million in liquidity, and that's like 50. And in terms of transactions, that's 50% the transaction volume of Uniswap. So that's kind of what has been our mission, and we're building on what we've done at Matic. So we built a hybrid Plasma POS scaling solution where you could get asset security by using Plasma, but also throughput by using a proof of stake network. But the next step essentially is to build a generalized layer 2 aggregator platform around Ethereum. So the best way to visualize that is if you keep Ethereum in the middle and build different scaling solutions around it. Essentially, you can offer maximum flexibility to the developer. So we have a hybrid Plasma POS scaling solution, which is production ready and which our entire network runs. But we're also building optimistic rollups, OR chains. We're also building ZK rollup chains. We will also have the ability to spawn your own chain. And what this will do is it will create this layer around Ethereum, which is your scalability layer, and allow the developer to build any kind of app, whether it's DeFi or whether it's some interesting concept like NFT plus DeFi. Or what if you want to bring DeFi into into some game and do that in a gamified manner? So we feel that if you can offer these kind of experiences to users, that's how you want to get the next sort of, you could say, 100,000 users or the next million users who are Web2 users who are used to certain interfaces. And this is how you want to be able to get them into Web3 and then sort of really sort of supercharge whatever DeFi is happening within the Ethereum space. So this is kind of what our mission is, and that's why we built this kind of infrastructure to enable that kind of experience, that seamless Web2 experience. So this is kind of where we are and what we're looking to do.
I see. Cool. Actually, you raised some interesting points there. So, there are so many different blockchains which are being used for DeFi. And initially, I suppose Uniswap, Ethereum blockchain were the most popular. Now it's shifting a little bit due to the high fees and so on, but still there are so many blockchains out there which have great potential to actually work in DeFi. So do you guys think like somehow there will be a leader blockchain on DeFi, or it will still remain everything based out of Ethereum, or there will be basically bridges to connect all of them together? What are your views on that?
So one of the ways which I look at it is this way, that of course bridges are going to be important. So currently we have, let's say, different blockchains with all with their each with their own amount of liquidity and their own ecosystems and their own communities. Now, when you build bridges, what you will do is you will connect all of these different islands of liquidity and communities, and over a period of time, what you will see is that now that the communities are interconnected and they can move their assets freely, the community will slowly start coalescing towards this one ecosystem, which sort of suits their sort of requirements the best. So it's sort of a way of natural selection, where ecosystems which do not provide that level of flexibility, which do not provide that level of composability, essentially are going to get pushed out, and it will eventually coalesce into these maybe 2 or 3 chains out there, which will house, you could say, the entire blockchain community. And to accelerate this natural selection process, which is also happening right now, but to accelerate this, the only way is to build those bridges and let the communities interact together, and then let the community decide, which is the best chain. So that's really sort of my high-level view on how I think this is going to play out.
Mm-hmm. Cool.
So maybe I can jump in here. I think like if we're looking at I mean, I don't think that I know that Binance Smart Chain is doing a lot of transactions now, and I would question the legitimacy of everything that's going on that chain, as I think a lot of other people also would. But like we definitely know that there will be activity on other mainnets, right? And we also see Matic, which is it's a scaling solution, but it is in its essence a separate blockchain, right? Compatible and everything, but I definitely see that we will have Ethereum as being the place where I think most of the major DeFi protocols want to maintain most of their value, right? I mean, if we just look at it from like a pure like protocol, what is the most important thing for DeFi protocol, right? And that's security. Like without a doubt, security. So you want to be really on the most secure and decentralized network if you're handling this amount of money, right? And from my perspective, I don't really see any of the newer blockchains offering quite the same security yet as Ethereum. I know there's a lot of talk about like how some of the other ones can potentially in the long run compete, but we just right now see like a lot of issues with them, right? There's the ones that aren't launched yet or still has like key features missing to launch. We can't really speculate in them. But we also have some of the ones that already launched that, you know, like has problems, right? I mean, we saw, I think it was Avalanche, you know, go offline. Like, how does that even happen? I also saw that Cosmos, I think it was yesterday, had some of their projects go offline. Like, how does that even happen, right? Like, imagine if you have like major price changes in like a blockchain that goes offline. Like you know, you could potentially have like the entire DeFi protocol like simply not be able to survive that, because you need 100% uptime, right? And that is what a blockchain should give you. So I think right now we are still like very, very far away from seeing any promising activity on some of the you know, competitors. So like as Arjan said, like they might in the end be part of the same ecosystem, but I think they're still very far away. And right now, most of the activity that we see on these other like EVM compatibles is mostly forks, right? And I think that the ones that then try to alienate the Ethereum community, like Binance Smart Chain, for example, they fork something, but I don't really see them having a lot of like very serious teams building there. It's mostly just, you know, like teams that fork something. And like, if you haven't built it yourself, I mean, you might be able to keep it up for like a while, but I'm not sure you can keep up with the level of like innovation. And you could also just see like problems coming down the road if you don't entirely understand the code. I don't know if you look into like how they actually forked it, like often you see like that there are some problems, right? That they might not understand everything 100%. So I think like it would be very interesting to see how the next 12 months develop with some of these newer blockchains that, you know, should be competitive, like Near and Polkadot, and you know, if we see Cardano launching eventually too. It would definitely be interesting, but they're starting very far behind. And if they're not EVM compatible, another big problem is that they need to build everything from scratch, right? They come out with a new code, like new coding language, like a completely new setup, and they need to have teams that like not only learn how this new language works, but they also need to build everything from scratch, you know. And I think it will take time. It will definitely take a much longer time than people kind of like think it will. I mean, I've seen how big DeFi protocols with so talented dev teams, like how long it takes to actually ship things. Just because, again, going back to my first point, the most important thing is security. And when you have security in mind, you don't do any shortcuts.
Gustav, just quick question then. So does that, I mean, are you ruling out like Maker ever moving to layer 2? And I mean, the reason I'm asking is because right now transaction cost can be like $50, $100. So we are over time pricing out more and more of the wallets where it becomes feasible to use, right? And that's not going to switch anytime soon because Ethereum settlement layer is becoming more and more valuable. So I don't know, like what, you know, for me, like layer 2 seems like that kind of solution. And I don't know if you mean like some of like how you see Maker fitting into that.
Yeah, so we at the BD team, like what I've been working on, you know, we saw it already like over a year and a half ago, and you know, we also have been in touch with Matic, for example, for like a very long time, because we saw very early on that you know, for example, we have a big community in Latin America, and you know, even when Ethereum transactions, just a cent transaction was like $1, with their average transactions of $10. Like it was already too expensive. So we see this kind of like that, like I see this, but like DAI, for example, would be existing on all layer 2s. DAI is already also now bridged to like 7 other blockchains, like Clayton, Ontology, and Neo, Binance Smart Chain. You know, we are on most of the layer 2s as well, and you know, want to continue to be on as many layer 2s as possible, how I perceive it. So I think like DAI as like a stable currency definitely needs to be everywhere, right? But at the same time, I think like the main settlement, at least from my perspective, will probably need to stay on layer 1 for now. And it's also, I know that we price up people taking smaller loans at the moment, and I hope that we can solve that as a community, right? But right now, it's just so important that you have like the security is like the most important thing. And right now, Ethereum is just like the best option, even if it's very pricey.
Yeah.
And also, like, you know, another important point is, the point is that, there is no perfect solution, right? You can't have perfect security, perfect throughput, perfect flexibility. Like the solutions like that don't exist. There's always some sort of trade-off. And the way I would see it is that security at the end of the day is a technical problem to solve, and they're bound to be solutions, right? So optimistic rollouts, for example, is one of those solutions. where you take verification call data to layer 1, you do that. Now it may turn out to be expensive, but that's one approach. Then with ZK rollups as well, we've seen, right, where you have validity proofs, and then you have heavy computation, but you can provide a proof which cannot be challenged. So I do feel that even on the layer 2 side, while right now layer 1 has the highest amount of security, and beyond a shadow of a doubt, and I expect all the whales to stay there for the longest period of time. What I also feel like, just another way of looking at this, is that as a person, like if I were to talk in terms of investments, like there is money you play around with, and then there is money which is your, let's say, retirement money, right, which you won't touch. So I expect maybe that money to stay on layer 1, which has the highest amount of security, but all your investing, staking, and all of your daily transactions, like for example, many of us who, let's say, so many people do stock trading, daily day trading, right? They do these kind of things to earn extra money, and they invest in options. I feel all of those things are going to move to layer 2. So all the money which people used to play around with, to invest, to grow, that will move to layer 2, while I feel that the retirement money will maybe stay on layer 1 for the foreseeable future until better solutions are found. Like for example, one of the solutions which worked for us was to checkpoint transactions onto Ethereum. They had to make sure that there is a high degree of asset security. But like you said, it's not perfect. It's not Ethereum security. So
yeah,
I think,
but I think
yeah.
So is it like, when I'm talking about security, it's also like if you fragment like the Maker protocol, you could, for example, have like an instance running on a layer 2 that wouldn't be secure, because like there would be too much collateral getting liquidated, or people would be able to manipulate it because it's too small in liquidity and so on. So it's also about like the Maker protocol itself is, I wouldn't say fragile, but like if you start fragmenting it around, all of a sudden you need to govern all of those like smaller versions of it too. So that's just why it's very, very complicated. Where like with, for example, like Aave or Compound, something like that, you have a peer-to-peer money market, right? And like the rates will be what they are, because you will have like depositors and you will have borrowers. Where like with us, we have like the stability of DAI and the security of DAI as like the main priority. And that just makes it like so much more complicated, right? If you look at how much governance we have compared to the other lending protocols, it's really like a world to differ.
And so just to add, like since you guys said security, it's a bit of an abstract term, right? So how would we even like quantify it and say, well, there's 10 units of security on Ethereum and 3 units on Polygon, for example? I mean, any thoughts around that? Because I've just used with layer 1, I don't know how to kind of think about the layer 2 security, even though I know it's less secure.
So there are ways of looking at. So I think, so there are a couple of metrics here. There isn't like, so that's a very interesting point, by the way. I never thought of security that way. So this has given me some food for thought. But one of the ways of looking at security, number one, would be decentralization, right? So you should have a fairly decentralized network, where you have nodes in geographically and in different places. So this is one, offers you a level of security, right? So if all the nodes are in one place, then obviously you're open to manipulation. The second thing is, so for example, we run a proof of stake network. So if I were to maybe talk about that, one of the ways is to see how many tokens are staked on that network, right? And so that gives you a level of how much security there is in terms of, let's say, a number. So if I were to put a number, that gives you, let's say, a dollar figure, that okay, we have 300 or 400 or $500 million worth of sort of volume locked in our contract. So that gives us that much of security in terms of the amount of volumes we can handle. So transactions up to, let's say, 150 or 200, 300 or 400 million are perfectly fine. So that's one way of quantifying it. I think another way of looking at security is what happens if somebody does something wrong. So one of the problems in layer 2 is like, there are many ways, many things have been discussed, like for example, mass exits, etc. Or if somebody does like a bad transaction. So what happens if you're a bad actor? So for example, one of the ways we've solved for it is by, having a slashing mechanism where you lose your entire stake, and there's a heavy penalty for going against the network. So if you have a very decentralized network with a heavy penalty, and at the same time, you have a certain volume locked into, or rather staked in terms of tokens on your network, then that in some way offers a certain level of security. Now, is that the same as Ethereum? No. Ethereum, hands down, is the most secure. But I feel these are some of the ways one can solve. Now, to quantify and how you would decide which is more secure is something, which I think we can maybe discuss, because I also am not really sure how we could put like one number behind that metric. I feel that it'll be a combination of these factors which come in and then sort of define, let's say, security of a network.
Yeah, because it's definitely not just hash power, obviously. Yeah.
The problem is also, like a lot of, that's also the problem with protocols in general, right? Is a lot of the time you don't know it's unsecure before something actually happens, right? I mean, we've seen some of the big protocols recently, like Yearn, for example, and there was also like not too long ago there was like a compound like Oracle outage, where it's like, I mean, like people might have been like skeptic. I think maybe the Yearn is a better example because a lot of people have been critical of like how compound uses oracles. The Yearn was just like so complicated manipulation, right? And like, how do you even measure that? Like, because like you don't know it before it happens. And I could imagine it's going to be the same with like layer 2 solutions, right? Like some of these things is like no one expected or thought that this could happen until it actually happened. And until then, everyone had this perception that this was safe, but then something happened that, showed that it actually wasn't safe at all. So it's very difficult, right? So I think that's why like I always go back to, like what Dennis said, like total value locked versus how long has it been live? Because, I kind of like make the comparison that the value that you have in the protocol is kind of like the target you have on your back, right? And if someone managed to hit that target, they can basically scoop up the value.
Yeah, that also brings more risks to the big players because the target is bigger. So and there's like even a small chunk can be significant for try and go through whatever walls you've built around it. So yeah.
You guys definitely brought up some very interesting points about security versus prices and so on when trading in DeFi. So I guess we could have continued talking about this for pretty long, but let's go for the next topic. So what do you guys think will make DeFi scale in 2021 and beyond? So is it just a trend like in 2017 with ICOs, or is it here actually for the long term? And like, how do you see the future of DeFi?
Well, I think as I mentioned before, I think this is a completely different market that we are looking at, compared to 2017, where everything was very kind of premature, no real products, no real money, and today we can see real products working for a few years already, still very young. So even the most experienced protocols that we see are quite young, 3-4 years. That's the maximum we can go. So everything is very young, and I think if we wanna see how this scale, into everyone is talking about DeFi doing X40 or whatever during this last year or even less. It's still a fraction of what's going on, with CeFi, with centralized finance, and I think everyone is kind of trying to reinvent the wheel in a way in DeFi instead of trying to take whatever tools we have in central finance for decades now and try to make them work also in a decentralized way. Of course, I'm looking at that through the glasses of B protocol, which basically this is what we do. We talk about the backstop solution, and people in DeFi are still looking at us, very in a weird way. Most of them do not understand what it is, don't know about what it is. But this is basically a common practice, in most traditional finance systems. Just to make sure whatever positions users take, are kind of backed, and the platform can't get hurt from that. So I think this is something important if we want to see, we're looking at BitMEX, Bybit, all those big, exchanges doing, X100 leverage for users, while DeFi offers something around 3 to 5 in most places. Some have, been encouraged enough to give, X10, and still this is, very, very low. And if we want to show some better efficiency for users' funds, so we will need to bring more tools into the ecosystem to enable that. And that's one of the main issues.
Thanks very much for sharing your views. So our time is running up. We only have 8 minutes left. So I suggest in 2 minutes, let's just try to discuss what will be the future of DeFi, and then do 5 minutes for the Q&A.
Sure, I'll just take a quick crack at it. So I think one of the things so there are two couple of game changers here. So apart from being able to sort of get mainstream interest into DeFi and get your average investor also, invest some part of their savings into sort of DeFi is one part of the story where you get more volume. But what we'll see are also interesting concepts, right? Like we just also talked about real world tokenization, where people are looking at expensive art or even, for example, expensive wine to be tokenized and then sort of turned into some sort of investment asset. And of course, we're seeing this with the NFT sort of world as well. So I think this whole NFT plus DeFi element will sort of bring in some new flavors. And then, of course, we talked about security, but one way of solving for security is insurance, right? So you take it for granted that something's going to break, and then you have insurance. And like in the real world, we have insurance, and then we also have reinsurance. So there are ways of sort of solving for that as well. So I think these are some of those concepts which I see, coming out in maybe the next 4 to 6 months.
Totally agree. Cool. So let's jump for the Q&A. There are a few questions in the chat. There is one that is addressed to Gustav. So the question is, Gustav, can you tell us if there are any planned alternatives to how current auction works?
Yes. For almost coming up a year now, ever since March 12th, the community has been working on first liquidations 1.5 and then liquidations 2.0. And liquidations 2.0 will basically allow the liquidation module to tap into DEX aggregators, such as, for example, 1inch could be like a possible solution that I think Kyber might be another good example of somewhere where that could happen. So basically, it's almost finished. I think they're in the auditing process now, and then the community will launch this liquidations 2.0 module. Which will, this is just like one of the main features, but there's like a lot of new improvements that have been made. So yes, there's planned alternatives to how they currently work.
Awesome, guys. So to finalize, what advice would you give to new DeFi investors? Each of you have 1 minute to tell us.
I would tell them not to invest, just to go back to step one and start learning about blockchains and why this technology is amazing and what instant settlement means compared to what's happening in the conventional world, what we're trying to prove, what we're trying to build here, get a good sense of that, and then start learning about wallets. Just take it easy. Don't go straight diving in, and because you will lose your money, and it's a shame to do it like that just because you're rushing to make quick money in the next 3 months.
Yeah, I would say that I think Twitter is like a really good place to start. However, Twitter can both be the worst place to start and the best place to start. There's like the deep ends of crypto Twitter that is dominated by anonymous profiles and memes, which can be fun when you kind of learn how to filter what to listen to and what not to listen to. But there's also some really good people to follow. For example, DeFi Dad, I think, is putting out a lot of really great educational content. Following the different projects, seeing what they're up to. I would also, agree with Dennis that jumping straight into the deep end of the pool in the beginning can give you some very expensive mistake money. So I would also recommend start learning, start following the space. If you actually enjoy it and you think it's exciting, stick around and try to maybe over time figure out what works for you. But in the beginning, I would also recommend just learning.
Yeah,
Great.
Same here. I think that's important, to take it slowly, learn a lot. Don't get dizzy because of those huge APYs and things like that you can see. This most of the time it will end bad. So yeah, just learn what you need before you IPin. That's probably important.
Definitely, I also second the same thing. And there's so many like DeFi Dad is one individual who's come up with so much educational, interesting material. So there are many other blogs as well. Bankless is another amazing place to get more, maybe a higher level insight into the industry. So I think knowledge is what sets apart the people who are able to make a profit versus people who lose money. So I think the more and again, like taking it one step at a time. Like everybody gets, don't fall prey to that FOMO factor and switch off your Twitter for some time, and then just focus on really understanding some of the basics. And I think after that, everything will make sense. And then so I can't stress that enough. I think that is the single most important advice I'd give someone.
Great. Dennis, what is your advice?
Well, I mean, I think I added some at the beginning, just donate pin, and I agree with everything everyone else has said. I think we've covered pretty much everything. Just take a deep breath and just, think twice before doing anything.
Great. Yeah, so we had a great discussion, guys. We discussed many things in the DeFi space, security, risk and reward, Ethereum and other blockchains in DeFi. So now it's the time to finish, and thank you so much. It was great meeting you guys, and I hope everyone enjoyed.
Yeah,
it was a pleasure. Thanks, everyone. Thanks for having us. Bye.
Thanks, guys. Take care. Bye-bye.
Bye.